Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Lululemon. Okay, the stock has been drifting sideways for the last couple months, like since the first part of June. We've had this stock just trading with about a 330 top or so and about a 290 low. And so this is just the type of basing pattern that we need this to move higher. This pattern, though, kind of gives you, this is a good example of why an active trader would be taking profits, even if it's from a lower level to where the stock is now. They'd be taking profits so that they avoid the sideways drift where your money's just sitting in this stock for almost 2 months before it starts to work for you again. Now, there's nothing wrong with holding through here, and in fact, I think there's a lot of merit to a trader just saying, "Hey, you know what? I like this company. I like the way I look in their yoga pants. I think I'm kind of svelte and sexy with those things, and others might too. So therefore, I'm going to hang on to this stock. You know, that type of thing. Not so." There's merit to that, but a lot of folks are more actively trading, and they don't like to hold stuff that's just stagnant. Okay, fine. You know, there's more than one way to skin the proverbial cat. I don't know anyways, but that's just me. So the stock here is now up again, and on decent volume, about average volume today, but you can see it's been trading mostly below average volume during this little run up. So there hasn't really been a lot of interest in this stock, a lot of activity in the stock, and that's actually a good thing. You know, we want to see these sideways drifts occur on light volume. Now, we want to see the volume pick up when the stock breaks out on the right side. So that leads me to my analysis for today. If this stock starts to break out, we definitely have to see higher volume here. We got to see the stock start to pick up volume, and then that makes you a lot more confident in buying the stock to hold it for the next leg up. I think your stop on something like this, you can give it a 10% stop below 300, below the 50-day moving average, or you can give it a tighter stop under the assumption that Friday's intraday low is not going to be retested. That's 313.62. So you'd keep a stop, say, you know, right down there. That cuts your risk down almost in half, and it keeps you in the trade if the trade's working, and it gets you out a little sooner if this stock turns out to be just needing more sideways drift. So anyway, that's how I would trade Lululemon. Members, get over to the strategy session and take some notes. I put a couple new stocks on our growth stock list today with entries and stops and that type thing. So, you know, I'm doing everything I can other than just reaching into your account and buying the stocks for you. So I will see you all tomorrow.